investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hello, Basil Chapman. This is Friday the 20th. We're looking at the Dow down 20 at 33,024. We discussed this about exactly a week ago, last Thursday into Friday. I was saying my suspicion is that we're going to start seeing the Dow weaken a little bit and other indices come on. And at this particular point, it's really important that the Dow, which is in a sell mode, reverses that very quickly and can go back to a buy signal, but that doesn't mean it has to go all the way to 33,400. Might be a little tough to do it right now, especially if you're looking at the weekly chart, but it's in this now, it's in a rectangle formation. That's really important to note the parameters. We're looking at 34,400 to 34,700 as strong resistance on the upside, but it's really important that the 32,800 to 32,600 becomes very good support. In fact, I don't even want to go to the 200-period moving average of 32,800, not in this phase. So a couple of things going on. I just thought I'd update. A lot of people had just sent a note saying, say exactly where are you in this market? I thought I'd be making it very clear. We have favored the Dow for a long time since the lows that were made back at, 28,660 on the 13th of October. We're still along that position. We have trading positions. We added another trading position this morning. But I don't think that that's going to be as successful as looking at the broader market. And I'll go through that right now. So what we're looking at is the S&P, and we do have positions. I've been trying to build up a portfolio of a crazy single digit that is just way oversold in an area that should start to see some progress in the economy that should benefit it. I'm looking at communications area. I'm looking at steel. I'm just trying to be infrastructure ready and looking at other opportunities. But I am going to tell you this right now, that if you look at the S&P, the way it's been repelled at this Chapman Wave inside track. Remember, what is that? For this Technical Friday, so I'm going to go into some of the technicals. I like to join trend lines, and a trend line is just merely identify, each person has their own particular technique. You can read about it, but most of the time you'll get some conflicting reports. So in that particular context, I'm going to make it my way. My way is that I try to join at least two, preferably three, high points or low points to draw the trend line. Within that trend line, if it's looking like that falling axe, in other words, making lower lows and much lower, making lower highs and much lower lows, then it gives you this expanding cone formation. But when you get to the bottom, it's really important to identify the support level. And when you get to the top of that range, I'll just do this really quickly. I'm going off course right now, mostly because I think with options expiration, I think we're going to see a very oversold condition with good rallying going on. I should do this because I do know that there are people that do intraday trading. Look, we've already had a peak D going to the left side, right side price, time match, just missed it, pull back, and now we've got another move to the upside. Look at that peak D in the 10, that's the 1 minute chart. Look at the 10-minute chart. You got two peak Ds pulling back sharply. There was that one where we opened after the futures ran up, and you sharply pull back from the 39, say 32 area down to the 39 13s. And here we are back at 39, 36, 35. We've taken out that left side high. Question is this now an E or a brand new A? Well, I don't have to answer that because it's the 1 minute chart that's going to tell me about the 10-minute chart or the 2 or the 5 minute chart. So I always put in the alternate count, which says my thinking here is that we got to continue this as the relationship is we never took out the original low. So this could just be a continuation pattern. I think the selling is in this particular phase, just for the first part of second part of the morning, which is really the 6:30 to the 8:30 time frame. Now we've got the 8:30 to the 10:30 time frame, and that says now there's some kind of a rebound being attempted, and the 1 minute chart is your key. So far, all the technicals there are positive. I don't want to go through everything. I just want to say key support is at 39.25 at this particular moment, and a big breakout will be 39.38. Now that's the E-mini. Now let's get back to what we're talking about, because S&P. Oh, this wasn't the chart I was going to go to. Well, this shows you all the support, Chapman Wave automated support and resistance levels. Look at the 200 period moving average, how it's been a barrier. Look at the whole bunch in the 38.50, then 37.50, then 36.17. These are all support areas that so far the S&P has respected. This is not the chart I wanted. I wanted this particular chart here. We can do this because I was going to show you. I know where I went wrong. There, that's what I wanted to show you. Just right here, we've been through this umpteen times. Yesterday, I did have a high trend gauge reading for anyone who was interested. Let's see, I'm going to take this and change it to the weekly chart. I'm going to go to the SPY, just to show you. Look, so this, is this what I wanted to show you? Oh, this is good because I'm not used to this because usually I have it there, so you can see it better. There. So look at this resistance. Isn't it amazing? You take your outer trend line resistance levels. This time I'm using just the wicks. And each time it got there with the lower highs and much lower lows, it got repelled. This time you made a little cup formation. This is the smallest one, and it went from green and the 9 moving average turning positive to pink, and then green again. And now it's green. This is the first time we've had such a quick switch from pink to green off that top. Look, every time it's just been a horrible turnaround. And that says this is the moment where the S&P needs to show, this is the SPY, needs to show some kind of veracity in the technicals, because the MACD is good. Stochastic's not bad. It's not pulling back like all of these others. On balance volume's a little disappointing. This is a weekly chart, but look at this, QQQ. Cannot get there. Even now, it's sort of struggling. This is a weekly chart, up 2.72 on the 277. You need to see the QQQ next week on Friday, up in the 292 level. Look, it's not so hard to do. You're at 278. You'll do that if you have a concerted effort to rally. But if you keep getting repelled, you're just not going to do it. Look at the IWM, the Russell 2000. Now, the reason why I said the Russell 2000 is actually strong, I said to subscribers, I'll do a little work on that in my show today, is because the Russell flipped to L, which is the 9th gone over the 14. It's out of the Chapman Wave inside track repellent zone that's been a real barrier for a long time. It had a fabulous candle yesterday, pulled back, went under it, but so far it's just barely above it. But that's great. This is the first time that on the second week of breaking out, we've seen a chart that is so far holding. Day is young, very young, and the stochastic is running nicely. That on-balance volume is just not showing the kind of power that I want. So I wanted to get to show you that within the context of just using look at this. How simple can the technique? You don't even need 2 lines. I do the 2 lines because I want to demonstrate it here. But you just needed that 1 line, and it's above that 1 line, a trend line. Nice, easy technique to use. So, in fact, maybe next week I'll have a couple of sessions where we just draw trend lines. I'll find a couple of naked charts and we'll just draw trend lines. Now, within that context, what I am looking at here is that the
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, so we've got a couple of questions that I'm going to get to in a moment. But you see how the IWM, the weekly chart, did break out above that inside track repellent zone? That has to become a support zone over the coming week. And you want to see a break to a leg D above the high that was made on the 18th, which is 188.96. And then if there's a consolidation, that consolidation really should be a sideways one, so the small caps can become leaders, and they have not been leaders. They've tried to be leaders every once in a while on the daily chart, but those weekly charts in all the indices other than the Dow were very, very weak. Now we're going to see if there's some catch-up that's going on, a rotation, in other words. So let's go through the question about the XLK. Yeah, the XLK has not rallied all that well, and this is the S&P Select Tech Spider Fund. I think the tech sector is just too individualized. There's some stocks that are doing very well. Even when you go to an IBM, and I've been talking about this for ages, IBM is holding way better than, say, Salesforce when it's in not exactly the same area, but does do the cloud, does AI, does cloud and enterprise software. So that makes it a little different. But look at the difference. The CRM is Salesforce. This is a little bit, I don't like this when there's a peak, D or E, way below the previous peak, because it says you're not yet ready for prime time. You're going to have to do a lot more consolidation. So going to, this Salesforce, squeak to a peak, E, almost like the E-mini futures, a 1 minute chart a moment ago, made that peak D pull back, suddenly sprang to an E and then pull back again. So this is important because Salesforce has gone from 311 down to the 126 area, and we're just watching it very closely to say, hey, are you going to start leading again? Or maybe you need a really long time out. You can't just have a 1 year or 1.25 year. Maybe it has to be even more than that. So we're watching it closely. What has been working, of course, is if you look at the SLX, which is the steel sector, this has had a really nice rating. Let's check to see that this isn't the arch that I drew in there, that extended higher. Oh, look at that. So that's your C right there, having a little bit of a pullback. Today's up 31 cents. This is the steel sector market vectors ETF, trying to get back to a leg D, and that would be above the high of 70.43 back in April. And that's going to be important. If it can do that, and that tells you that there's money going into the infrastructure area, and that's really important. Within that sector, then someone asked me about the XLE, because I try to do this almost every day. Yeah, the XLE is consolidating after a fantastic gain to 94.71. This is the S&P Select Energy Spider Fund. But you can see there's a conglomeration of the whole 92 to 94 area so far has shown that it's a repellent zone. And here you are at a peak E underneath that previous peak G high, and that peak E was 3 days ago at 91.57. It's holding really well. And as I said before, I think that the energy sector is consolidating and taking a well-earned breather. I don't know if it's going to lead again right in this particular phase. It might need a little more time. That's my thinking. If you look at Exxon, there's a good, remember 114s, where is it? 114s, a whole bunch of highs right in the 114s back in November, pulls back sharply to 102, rallies up, and where does it go to again? 114, and now it's pulling back. But it's this cup formation in the weekly chart that needs to garner more strength, not just pop above 114, maybe to 116, and then come back. You really want to see it in the 119 to 120 area to say, wow, that's incredible strength. Right now, it's shown fabulous strength, but it needs a breather. And this is part of that rotation. No, I would never, at this particular point, consider shorting any of this in the air. There's just too much risk. Energy right now is very much like the gold. Remember, we were always very afraid to short gold because, well, you had to get it exactly right because anything could happen overnight. Well, we're still in that phase in gold. Look at this. The GC is up 5 at 19.29. It's right in an area. Let me just show you this, because you see this middle chart here. This is the weekly chart. I drew in a price time match that's called bar symmetry, which went to next week, where it should have tested the area that I chose as the left side high, which is 1915.3. This is the gold continuous contract. It made these 3 lows at the bottom here, slightly lower low with good time sequence, and then rallied very sharply. The weekly chart says 9 is way above the 14, and the price is way above the 9. MACD's strong, stochastic is a little overboard. That says we're in an area that says maybe a little choppiness. Doesn't say major sell, just says choppiness. Look at the weekly chart starting to improve with the second cup formation. That's all very good, and just says in this particular pattern, I'm just going to put this in here and let's see if that works out. Over the next 4 weeks or so, this is going to be your major initial support area, and then 1805 is the 200-period moving average in the daily. But if you're looking at this time sequence, we got to the high in a shorter time frame. I had chosen the high that was in the continuous contract back, I think it was June, the end of June. What was that? June the 13th. At 1915.2. Remember, your prices are going to change because I'm looking at the continuous contract, but everything else, the patterns, the notations, everything's the same. Just the price gets smoothed out. And then it plummeted down to this double bottom. And remember, I love to be looking at these double bottoms. Look at this bottom on the 28th of September. There's a daily chart at 1637. And what does it do? It retests on the 3rd of November at 1633.1. 4 points lower, and then it starts a big move up, and the left side, right side price time match started on this arch pattern. I like to use the arch or the cup formation, the midpoint insert if I can't use the exact low as a plumb line. So what happened is it ran up, and it missed this particular first one, but the second one was way up at that high that was made in June, the 16th. And here it is. It has another few days to go, but already last week it took out that high. So this is where you can expect some kind of a consolidation. And if you're looking at the technicals here, look, everything's positive. MACD's good. Stochastic's good. This is the stochastic at 84%. On balance, volume said it's getting a little bit tight. That's why I've been saying I'm expecting the upsides a little bit limited here, but no big sell signal at this particular point. So let me keep this daily chart up because I wanted to show you silver, Technical Friday. a rectangle formation can last a lot longer than your patience. And what happens very often is you pop out of it just briefly. You either go to a D, E, or F, and then you come back. And the whole thing is, if you take out the halfway mark, let me open this and let me do it in this short. Here we are. You can see it a little bit better that way. If you take out the halfway mark, you can take out the left side low of this rectangle support. Well, so far, it's still in the choppy sideways move. So silver's just choppy, range bound between 24.50 and I'd say 23.20, and it's stuck there. It's at 24.01 right now, up 14 cents. And look here, you've started this consolidation in the weekly chart, and the monthly chart is starting to improve. You haven't got the MACD crossing positive yet. So silver was leading, gold invariably follows, and then when gold starts to show strength, that's often where both of them suddenly take a little bit of a breather, and I'll go to gold as soon as we get back. Basil, Chapman, Tiger Conditions Hour, Dow's down 5, S&P's up 17. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So let me just say, with options expiration since the Technical Friday, Chapman with Technical Friday, I can't believe I was busy at the time with that sudden pullback because I was preparing for the show, that sudden peak deep pullback in the 10-minute chart and a sharp pullback. And I thought, oh my, I wonder if this is a 2-click session. In other words, you click on buy and you watch to see, look, the green 9-period moving average over the 10-minute, and it can stay there. It could stay there for a whole chunk of time. It could even stay since options expiration, and they've already had the fooling around of up and down and up and down. This could be one of those 2-click sessions that somewhere around 39.15 or 39.18 in the E-mini, as long as that the 9-period remains over the 14-period moving average, you might be able to hold it for quite a while, not just raise your stop or get your stop in minimum of a little bit of a profit, and just wait and see what happens. Come back at about 2:30 and see if it's running. I love those 2-click sessions, except I've just missed this one. So let's get back to our story here. What we're looking at is the dollar is in a little rectangle formation at the bottom. And it says, because for the first time we've had a long-legged doji. Doesn't look long right now, but believe me, when you're looking at intraday charts, this is a long-legged doji. What happens next is going to be very important, because the 9 is way below the 14 in the daily chart. That's the 9-14 crossover. The MACD is the histogram started to improve at the same time as you've got this is a green 9-period differential, still negative, but it's a little bit better than it was. And the stochastic is running off the lows of single digits. Now it's at 17%. And this little blue line right here is the gray, a 9-period, the RSI, the relative strength index. Monthly chart is just horrible, but remember, we were looking at this and saying 101.30 to 101.47, was it? What was that low? 101.53. 101.53. I'm going to put it over here. 101.53. After months, after going from June last year at 101.30 to 114.78 in September, peak F, pulls back in this inverted like a pyramid formation and comes back, and to the month, last month, to the month, no, it's 1 month early, it takes out the initial support line, the upper part of this rectangle, and it holds the Chapman wave inside wedge target support line, this little gray line. I usually make it pink, but there's so many red bars that I didn't want to change the color. And there's a potential doji candle today, being Friday at 4 o'clock. We'll see what happens. My thinking here is that the dollar is ready to attempt in the rectangle formation to break into the 102.50 to 102.92. 92 is the 14-period exponential moving average. And it could have a mild rally, and the rally it doesn't have to affect the market per se, because I think we started to remember, I said, think of your, think of your Bondi, Crudy, Dolly, Goldie, and Vixie as independent units, because the volatility index has pulled back huge, but it isn't, the market is not skyrocketing. It is just a particular index. Gold is running sharply, but the dollar lately has kind of, if you think about it, just within 102 to 101 range. It's been in this range now for about a week. And gold has gone higher, but now it's just starting the story. So I'm suggesting to you that at this particular point, what I'm really looking for is the symmetry, bar symmetry, that says in this period, I've got another week to go, the 101.53 low, which almost tested to the penny, the 101.30 low of June, we're now 8 months? 7 months. 7 or 8 months from that level. This is going to be very important. If the dollar manages, and now I've got to do the euro as well, USD JPY. Oops, that was the wrong one. That was the USD, EUR USD. That's what I wanted to do, EUR USD. If you look at the euro, it got smoothed out. All right, it doesn't matter. It made a peak G/B high, leg E in the weekly chart, and that's above the left side high with the price symmetry that I was talking about. But remember, I choose this by eye. I don't choose it. Normally, I would have gone to the doji candle, but we were so far down. I said, I'm just going to do it this way. But normally, I would have gone up here to there, right? And there's your midpoint. I'm going to raise this. It's the same distance. I like to go up against the wall. And there it is. And that was last week. So last week it did exactly what we were looking at. It went into this doji candle of the week of the 22nd of April, high of 1.093 and low of 1.076. And here we are with a high 3 days ago of 1.09. Did it hit 9? No, it went to 1.088. So Yeah, we are. The MACD and stochastic in the weekly chart are still very strong, just like the dollar's technically still very weak. But this is exactly where you'd find that there could be a bounce. So now let me show you the other thing, the USD JPY. This is the USD JPY. There it is. And that is, you're starting to see a little bit of strength. So there was an alternate count. G/D went to an E, a trough E, and here's your E in the weekly chart. Oh, we didn't do that, right? I forgot to actually type it in. So if I go to this left side low, I had chosen that peak D, long-legged doji candle as my midpoint in this particular instance, because it just looked like we came down so quickly I couldn't use the other one. Let's see right here. Okay, that's exactly to the day, to the week. All right, so this says here as well, the euro could have a little bit more of a bounce, but it can only bounce if we can get, it's at 129.83 right now. It needs to close decisively above the candle of the 18th of 131.57. So I'm watching this closely, or it could just be stuck in the range, and gold could just be holding there, hanging in there very nicely. So I did that. I just a real quick question about palladium. Joe, yeah, palladium made that peak F correct. It was a peak F top in the trend line resistance, and it's pulled back. Was Joe? Oh, I thought it was Joe. I had written it down somewhere and I can't find it. But I was asked the other day if I'd look at it, and here it is pulling back. It's made a peak E because today it's not going to go above 1120. It's at 1,053 up 12. So this is a peak E. So you could also have a little bit of a rest right here. So as I'm looking at this, I'm saying I mentioned last week that it was a really important week. Going into this week, what would happen, not just for January, but going to February. I think we're getting a sense now of kind of the market action we can expect. And that's really for my overview for subscribers tomorrow. When I do my overview, I'm going to be looking at these different sectors, why we've started going to certain areas, and what are still the areas I'd like to get into. And I still would like to get into gold on any sharp pullback. Maybe it doesn't have to go really sharply down, but it needs to pull back. That's what I need to look at. So the question then came in, which I didn't get to yesterday, was TSCO. Yeah, this is really important. This is tractor supply. So this is farm supplies, and they have animal supplies. So this is also pulling back after the Chapman Wave inside track repellent zone in the weekly chart pulled it back, but it's closer to the highs. No, it's probably in the middle point of highs and lows, but it's pulling back here. It's on the 200 moving average. That's what you want to know. Yes, I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So Netflix comes out, this huge surprise to the upside, and the market pops, and what does it do? It goes to a leg D, gaps up to a leg D, and it hits 344.00. I was looking to see if there'd be a round number somewhere. The day is young, so anything can happen, but so far it is a 00, a round number high. Let's see if that stays. Most importantly, if it starts to trade above 344.00, that is not only very good action. Remember, we spoke about the gaps and Technical Friday. So let me just do this. I had some other things going on that I wanted to talk about, but it is Technical Friday. I like to do this. This is for my benefit because, I mean, when you do a show for 20 years, and you don't want to just repeat the same thing over and over and over. You want to be able to be creative and inventive. So let me just do this. I'm making it red just for now, just to show you this. But it's temporary. Why? Because remember Nike? So it comes out with earnings, and wow! Not only did it gap up, it gapped up to a new high, which is alternate count, either a leg F or a leg A, but we did not know. And the rule of thumb is, within 3 sessions, actually, when on the way up, it's more, but I usually like to have the next session and the following session that's really important. So it's really 2 sessions. The third is just a confirmation. If it's on the gap down, you don't want it to take out the low of the gap bar. That's just a close below the low is really negative. You want it to be an inside bar. Preferably, you want to see within 2 sessions a test of the high if it's a gap up. And in this particular instance, it didn't. It held within that range for 1, 2, 3, 4, 5, 6 sessions. The 7th session, it just snuck above the high. And then it moved on, and went to a peak C. Did I miss anything? No, that's the A, B. And I've got it as a C, and it's still holding very nicely, even though it's down, up 77 cents, but it's a little bit off the high of 129.23. All right, now let's go to Netflix. So Netflix... what was the high? I don't think we had a round number. I mentioned that, but it was taken out intraday. There was a round number there. Yeah, 119.18. So, sneeze. Got our 10 o'clock to 11 o'clock sneeze out the way. Now let's look at Netflix. So here's the rule of thumb once again. I've got 2 bars. It's really best within the 2 bars to see all of this happening. And what is it? You do not want to see a close below the gap and the 3rd session, another close below the gap, because what it says is that the high that was made, in this case, round number 344.00, is going to be that whole area of 342 to 344 is going to be very strong resistance. What you want to see is the following session, even if there's a little nick below the low of today, which is the open of 336.79, it's got to preferably close above. And then within the second bar after the gap bar, the gap bar, you want to see either a test of the 344 high, or that's the preferable area, or at least a containment area without. The second bar mustn't take out the left side low. If the first one holds, the second one you don't want to. There's a good chance that it's starting to make lower highs and lower lows. It's going to fill the gap somehow or other. The most important thing, in this case, because Netflix in the monthly chart, the weekly chart has been in a buy mode, a very strong buy mode. It had a Chapman wave instant restart, so that's why there's a G/C. MACD's good, stochastic is at 83%. That's nice. On balance volume is good. It's getting a tad overbought. But look at this. For 2 weeks now, it's gone above that peak there. That peak, well, I called it an F. And you've got your Chapman wave inside repellent bar right here. Green. Put another one in. Make that red. Right there. And look how it's been both a containment bar and I have to make it pink. So there we go, pinky pink. I always make it pink so that you can see the differentiate between the red bars and the pink. So there's the pink. Now look what happens. Here's your repellent zone. It doesn't just get there and pull back. It gets there, holds there a little bit, and then pulls back. Gets there, holds there a little bit, then pulls back. Gets there, pulls back. Gets there, holds for 3 weeks, and then pulls back. And here it's right on the underside of it. So you can see we've got very clear delineated lines of resistance. And I don't have to put any lines at the bottom because you've got your green 9-period moving average of 309. Here we are at 335, up 19, holding quite well. So this is very clear. And the monthly chart has a lot of work to do to turn positive. So we don't have to talk about that. If I drew the rectangle formation, which you know that I like to do, this is a large rectangle. It says that over the next, I would even maybe say 3 months, that the body of this candle, especially the peak, the candle of April of ugly candle, April of 2022, with a high of 396.02, but the opening price was 376.80. That 376 is your first real target. If this is going to either make a peak, B, maybe next month it's a little weak, and then C, this is your target over here. And it should stretch it out, making higher highs and higher lows. That's the pattern that we're looking at. All right, next question I had, Alta. Someone said, is Alta ready to short? Well, it did make a peak D. It made a leg E daily, a leg E in the weekly chart, and a leg E right at the resistance. Look at this. Talk about inside track repellent zones. Just tell me that is just a work of art. What was the chart I was looking at the other day? I said, wow, this looks like the Alta monthly chart. Oh, I can't remember. I should have written it down. There was a chart that said the daily chart looked like this, really bumpy, but it kept going up, higher highs into the resistance zone and then pull back. Higher highs, and it did it very quickly. So here we are, leg E in Alta. I would not consider Alta a short. Alta Beauty Inc., beauty products, you short at the risk of having all these people watching their health and their beauty to become really angry at you. So yeah, it could pull back a little bit, but it's still ready. Yes, your key support is the previous high peak E right there on the 13th of 483.80. We're trading at 481.23. If it pulls underneath the 480 level, it can have a consolidation, but I wouldn't consider this short. I'd say if you were long and you want to take a little money off as money management, this is probably a time just to take a little bit off and then be prepared to put it back. Question came in here. Where did it go? Oh, man. Yeah, I've got to look at something. I wrote it down. I don't want the music to come on just before I start to look at it. I looked at that. Oh, the question came in about the XLP. Could you follow, Basil, Dan asked, could you follow up with the XLP? XLP, it didn't say long or short or anything. Yeah, you remember the XLP is a S&P Select Consumer Staples Spider Fund. It's pulled back under the 200-period moving average, and that's another reason why I'm thinking, I wonder if I should go to the XLI now, which is this is the real Dow industrials. This is the S&P Select Industrial Spider Fund. You can see this is a very sharp, looks like the Dow, I guess. And this is a very sharp move up to this peak D right here, and it's pulling back. And what I want to see is over the next 3 weeks, money comes back into the industrials and continues to go out of the defensive area, the XLP. But at the same time...
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, we're back, and Ellen McDan wants to know about VICR. And I remember we did this, and I did it very quickly. Maybe we're running out of time. I love this. It's taking a Friday. I wanted to talk about this today, and I didn't get to do it. But you've given me the opportunity. A long rectangle formation can last a lot longer than your patience, and I drew this in with the left side, right side price time match. Most importantly, you see, it is basically in a rectangle, but when it goes to the top of the rectangle, when it comes back down, breaks the halfway point, if it holds the left side low, that's really important. And especially if you're looking at it as a bowl formation. A bowl formation means instead of a cup, it's really stretched out, you know, like your little doggy is drinking from a bowl. And this is that flat bowl. There it is. And now you've broken out. And I said, I like it. And I can't remember, were we breaking out to a leg C? I think we were when we spoke about it. Maybe we hadn't. But we've broken out. We've gone right to the 200-period moving average. We haven't been there for months at the 200-period moving average in leg E. I love this chart. This is Vicor Corporation Power Systems. I'm not sure exactly. I'll just grab that quickly as information. Got a doji candle at D, and then lo and behold, you gap up today. I love this. It says that it could finally have resistance at 64.27. It's up $1.70. And therefore, all this area between 60.50 to 59 will be key support. I like this very much. I suspect from the way you've asked it that you actually are long it, and I would stay long. I wouldn't even do money management right now. It's just holding too well. But remind me, maybe on Tuesday we look at it again. So just to wrap up, you're going to go to some great programming the rest of the day. Check out my opening call, my daily newsletter. As I say, we did something a little unusual today. I'm doing it because I'm looking at this. I really want to start talking about the coda phase. I'm looking at everything from art to glassware to all sorts of things. I think we're in an incredible age, just an incredible. I know about the layoffs and everything like that. I will not be denying it, but I am going to talk about it from now on because I think some things are happening that are very different to what we've seen before. But in that particular context, be very selective here in the near term in terms of your stock selection. Things are really working. Some are working very well. I'll see you on Monday.